we've seen how emerging markets have been embroiled in this turmoil. What's the reason behind that, despite the fact that fundamentals are pretty much intact?
Right. Well, think back for a moment to the 70s, the 80s, when Asia was rising. The Singapore and South Koreas of the world ran current account deficits, more than 5% of GDP each year. In fact, at some point, more than 10% of GDP. The world didn't look aghast at that. It was sustainable. The capital markets, global financiers thought that it was an investment opportunity, and we grew. So what's changed? Why is it that today you're penalized for running a current account deficit? It's a very fundamental question. Why is it the markets are focused on a very narrow metric of a country's sustainability and its health?
Case in point, Indonesia.
Case in point, Indonesia. Case in point, even Argentina, even several other countries. Every country has some policy weaknesses. But the fundamental issue here is not about individual policy weaknesses, which are there in every country, but about the fact that the system as a whole has lost its resilience. There's too much short-term capital flows dictating the future of countries. And countries have to respond by tightening policy, far more than is warranted by domestic circumstance, just to defend their currencies. And what suffers is growth. It's not like the global financial crisis, where you had a major financial crisis that hit everyone at the same time and we all took a big knock. It was a recession, right? This time round, growth is being eroded by stealth. One country at a time, one episode at a time, one liquidity squeeze at a time. But if you accumulate it, it's a net reduction in growth for those countries, but also for the world economy. And we're lucky today because the US economy is very healthy, but the cycle will turn and we'll find that we don't have very many other engines. So we all have to be concerned about this.
So what changes need to be implemented? What policy needs to be adopted?
Well, first, when capital flows in large quantities into countries, either you have a change of government and it's a reformist government, or the mood internationally shifts. As they say, risk on. Lots of money flows into emerging markets. We shouldn't necessarily be cheering at that point. Governments have to think hard about what the economists call macro-prudential policies to smooth the flow of funds, or to ensure that funds are flowing into productive investment, and it's just not just short-term flows. And that exercise in policy making has to happen in peacetime, not when you're in a crisis. And the IMF, together with the national authorities, have to know that when capital flows in, it's also capital flows at risk, and it can flow out. And we must have a good understanding of what's happening in the advanced countries when money flows out, when you get these spillovers, and when can it be reversed, and plan our policies accordingly within the emerging world. Otherwise, we keep going through booms and busts. We've got to smooth it.
How do you assess the risk of financial vulnerabilities in emerging markets right now? What's emerging?
So I think fundamentally, we should be looking not at very narrow metrics like current account deficits and the like. We should be looking at whether a country has an open and inviting business environment, whether it's attracting foreign direct investment, and if it's not, what are the regulatory changes that are required. Look at the real economy fundamentals. Look at the quality of governance. Don't look at one narrow metric of finances. And remember that if we keep looking at the narrow metrics, we're going to be hurting growth in the long term.
DPM, part of the reason for the volatility is emerging markets' dependence on the US dollar. And there's been discussions here about possible alternatives like the euro, like the yuan. Where do you see discussions going, and is it a viable option?
Well, I'd say there are two parts to your question. First, if you're talking about the composition of trade and investment instruments, the fact that they're dollar denominated, yes, I think there's a over-dependence on the dollar, but it's going to change very slowly. It takes a very long time for markets to change a currency of denomination. There's tremendous inertia, there's tremendous legacy. It doesn't happen quickly. But if you talk about 20 years, 30 years, I think the renminbi will grow in its usage, other currencies will grow in their usage, and that's probably not a bad thing. But short term, there's also an issue of the need for dollar liquidity each time you get financial tremors. And that is a very serious issue. The last time round, we had the Fed pumping in $500 billion of liquidity at short notice. May not happen the next time round. And the strength of the global financial safety net, fancy word but very important, the IMF, the regional financial arrangements and central banks together acting in concert is a very serious issue. We don't yet have that system of coordination, but it can be developed.
China at risk of being called a currency manipulator. Of course, it said that it needs the currency to float. What's your take on, I guess, the perception that's being held in the U.S.?
Well, I think if you look at China's fundamentals, and if you look at how the currency has performed over a period of 5 to 10 years, I think it's performed pretty much in line with fundamentals. I mean, you can argue at each point in time whether it's a little bit undervalued or overvalued, but it's fundamentally an economy where you're having gradual liberalization of the currency and the capital account, not too fast, and I don't think it's advisable to move too quickly. The currency is being set increasingly by market forces, and China, you have to remember, is increasingly going to be a capital exporter. That's the fundamental structural trend. And we're no longer a capital importer, getting more dollars in and people having to buy renminbi for local use, and you're becoming a capital exporter where you're selling renminbi and buying foreign assets. You shouldn't expect a continued trend of strengthening of your currency.
Just one final question. President Joko Widodo talked about winter coming to the global economy. Your thoughts on that?
Well, I think the seasons change each year, and financial cycles never last. Stability begets instability, and we're going to see instability. We don't know when, we don't know where it'll come from, but the next crisis will come, and we've got to be prepared for it. We've got to be prepared for it, especially outside of the banking sector.